And welcome back. And here's your latest housing market update. U.S. home prices fell for the first time in 6 months. And on top of that, closed home sales nosedived to the lowest pre-COVID levels in nearly 13 years. This is based on my own analysis of the National Association of Realtors report that was just posted today, which is August 22nd. So I have a lot to share in today's video, but if you guys haven't subscribed to this channel just yet, I invite you to do so because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house right now. With that said, thank you so much for joining me in today's video. I appreciate you. So this report, again, was just posted on today, which is August 22nd. So let's first talk about home sales and then home prices in today's video here. It says total existing home sales. This excludes multifamily and also excludes brand new home construction as well. So total existing home sales, which includes single family houses, townhomes, condos, and co-ops, decreased by 2.2% from June at a seasonally adjusted annualized basis of 4.07 million home sales this July. Year over year, home sales decreased by 16.6% from July of 2022. But here is my own analysis of their data here. These two columns is what I pulled from the website, the date, and the seasonally adjusted annualized basis of home sales. Everything else is based on my own analysis here. So let's talk about this July. At just over 4 million, down by 2.2% compared to June, but down by nearly 17% from 1 year ago. This marks the 16th month out of the last 18 months in which home sales have decreased on a month-to-month basis. And right now at 4.07 million, this is the lowest pre-COVID levels going back to November of 2010, which is absolutely insane. One thing I do want to mention in today's video though is that when I'm talking about any metric regarding a closed home sale, that would include home prices as well in today's video. This is a lagging indicator what our housing market was like when the home seller accepted the offer from home buyer about 1 to 2 months ago, or 1 to 2 months prior to July here. So I mentioned that because closed home sales in July were mostly from contracts signed between buyers and sellers in May, when average 30-year fixed rates was at 6.4%. And also back in June as well, when average rates were at 6.7%. I mention this because as of today, the average 30-year fix, according to the Mortgage News Daily, looking at daily rates, is around 7.5%, the highest levels we've had going back to the year of 2000. So the metrics I'm sharing in today's video are likely to look a lot worse in the weeks and months ahead. So I'll definitely keep you posted regarding that. So speaking of that, like I mentioned in my video from 1 month ago, I stated how rates were increasing and we should expect to see a decrease in closed home sales for July, which we did see that, a decrease of 2.2%. But looking forward here, we're looking at August home sales, which will be reported by the National Association of Realtors in late September. August home sales will likely look a lot worse though, because average rates in June and July this year were around 6.7 to 6.8% versus 6.4% and 6.7% regarding July's home sales. One more thing I do want to mention regarding some metrics regarding sales numbers here is that this actually marks the 24th consecutive month in which closed home sales are down on a year-over-year basis. For just over 4 million, not too far off the 4 million figure we saw back in January this year, which at that time, that was the lowest levels going back to October of 2010. They also shared though how each of the major regions fared, because there were some very big differences here. So regarding that, every single metro here, or every single region here, which is the Northeast, the Midwest, the South, and the West, fell by more than 12% compared to 1 year ago. In fact, the biggest decrease was actually in the Northeast, falling by nearly 24% year over year. In contrast, on a month-to-month basis, the biggest decrease was also in the Northeast, falling by 5.9% compared to the 2.7% increase we saw in the West. But the Midwest and also the South also fell by around 3% on a month-to-month basis. Okay, let's change gears slightly here and talk about the median sold price in the US here, because there's only two sentences in which the National Association of Realtors, or NAR, mentioned in the report here. It says the median existing home sale price for all housing types, which again is single-family houses, townhomes, condos, and co-ops, was $406,700, an increase of 1.9% year over year. Prices rose in the Northeast, the Midwest, and the South, but were virtually unchanged in the West here. So here's a look at home prices here. An increase of 5.5% in the Northeast, a gain of 3.9% in the Midwest. These are year-over-year changes. And also the South saw a gain of 1.7%, whereas the West was flat compared to 1 year ago. So that's the only information they shared. So instead, I want to share my own analysis of their data here, right? So these two columns is what I pulled from their website here. Everything else is based on my own analysis. So looking at this here, the decrease of 0.8% on a month-to-month basis. This is a decrease of home prices going from $410,000 to just under $407,000 is a decrease of 0.8%. This actually marks the first monthly decrease since January this year, which is seasonal. But when looking at the average change going back to 2010, the average change was a decrease of 1.1%. So the decline of 0.8% is roughly on par what we should expect happen during this time of the year. Based on my nerdy Excel formula there, a decrease of 1.1% versus only a decrease of 0.8%. However, though, when looking at the year-over-year changes, it's in an entirely different story here. The gain of 1.9% marks the first year-over-year increase going back to January this year. However, the year-over-year change is much lower than the average going back to 2010. Also, we only had 5 months in which home prices decreased on a year-over-year basis. So that was actually in February through June this year, we saw decreases on a year-over-year basis. And that was the first time we saw, or I should say in February, that was the first time we saw home prices decrease on a yearly basis in about 11 years. But that actually has gotten reversed though, because we saw a gain of 1.9% because of this giant increase in prices that we saw in the spring months of this year. But even though we're up by 1.9%, this is much worse than the average July year-over-year change going back to 2010, which is a gain of 6.4%. So to briefly summarize here, the decline of 0.8% compared to last month is roughly on par with historical averages, but this gain of about 2% is much lower than the 6.4% average going back to 2010 here. But wait, there's more, because the peak to trough, which was last year's correction, that was in June last year, where we had all-time record highs at nearly 414,000. The trough was in January this year at 361,000. So last year's correction was a decrease of about 13%. But because prices have increased by 12.6% ever since January this year, the difference between the peak last year compared to July's levels is only a decrease of 1.7%. This means because prices have gained by about 13% this year, the correction that we saw last year has been nearly wiped out because we saw a giant increase in prices in the spring months of this year. And that's why we're only down by 1.7% from June last year. I do want to add one thing here, is that we should expect home prices to decrease because of seasonality for the remainder of the year. But because rates are so high right now at around 7.5% as of today, I would imagine these numbers right here are likely to look worse in the weeks and months ahead here. But speaking of that, even though we saw a correction last year, We're still up by 12% compared to 2 years ago, back in July of 2021. And also compared to July of 2020, we're up by 33%. So the median sold price is up by about 33% from about 3 years ago. But on top of that, average rates back in July of 2020 were around 3%. And now rates are more than double that. So we have rates more than doubling in about 3 years. But on top of that, prices increasing by more than 30% as well. Can you say not sustainable? Also comparing this to 4 years ago, back in July 2019, pre-pandemic levels, the median sold price is up by 45%. Just absolutely crazy. A giant increase in prices over the past 4 years. Something I do want to mention is that the correction we saw in 2008 through 2009, this is July 08 through July 09, is a decrease of 14% compared to an increase of 1.9% this year. So the correction we saw in 2008 and 2009 is not even comparable to the changes we're seeing in today's numbers here. All right, let's get back to the report here and talk about inventory levels. So total housing inventory for the month of July was at 1.1 million units, up by 3.7% from June, but down by nearly 15% from a year ago. If you guys follow the channel here, this number of over 1.1 million houses for sale, I would imagine this includes some pending home sales as well as houses actually for sale. And I mention this because Realtor.com as well as AltosResearch.com are reporting inventory levels of less than 600,000, whereas NAR is reporting inventory levels way above that at 1.1 million units. Just something to keep in mind. The unsold inventory index, or the month supply, right now is at 3.3 months, up from 3.1 months last month and up slightly from 3.2 months that we saw back in July of 2022. The Realtors Association also reported that days in the market was 20 days this July. This is a time frame when a home seller lists their home for sale until they accept an offer from home buyer. That's 20 days, up from 18 days in June and up from 14 days we saw just about 12 months ago. So this means that it's taking about 6 days longer to sell a home compared to just 12 months ago. On top of that, 74% of houses that sold this July were on the market for less than 1 month. That number was over 85% during the spring months of 2022, by the way. First-time home buyers were responsible for 30% of all home sales this July, up from 27% in June and up from 29% from a year ago. All cash sales, a lot of people ask about the percent of transactions of all cash. That was about 26% of all transactions this July on a national level, identical to last month, but up from 24% from July last year. Individual investors and second home buyers, who of course make up many cash sales, purchased 16% of all home sales this July, up from 14% from a year ago, and but down from 18% from last month. Distressed home sales, which is defined by a foreclosure or a short sale, is virtually non-existent still. It has been non-existent for about 2 years now, which represented only 1% of all closed home sales this July. And lastly, I want to share some slides with you guys, also from NAR as well, regarding home prices and of course some other metrics as well. So again, home prices are up by 1.9%. The first time we saw a gain on a year-over-year basis going back to January this year, where at that time prices were also up by 1.9%. However, as they stated though, the gain of 1.9% is much worse than the historical average of over 6% going back to 2010. Also, it's much lower than the 9.4% increase we saw back in July of 2022. Here's also a look at total home sales, the percent change on a year-over-year basis. So again, for July, it was a decrease of 16.6%, a lot better than the giant decrease we saw in the last half of 2022, where we peaked at a decrease of 36.9% that was set back in really January this year, and giant decreases of over 30% that we saw in November and December of 2022. Here's also a snapshot looking at home sales this July by each of the 4 major regions. So for example, in the South, 46% of all closed home sales this July came from the South. 19% came from the West, 12% in the Northeast, and only 23% came from the Midwest. So the vast majority of all closed home sales are actually coming from the southern region here. For sales by price range this July, the vast majority, not surprisingly, is in the range of $250,000 to $500,000. That represented about 45% of all sales this July, which of course makes sense given the fact that the median sold price is around $400,000. In contrast, only 7% came from houses that sold for over $1 million. And also only 4% sold for less than $100,000. And that includes houses that sold for $0, I guess. I don't know about you, but I don't know about any free houses out there. Here's also a look at the percent change in home sales from a year ago by price range as well. The biggest decrease was actually in the range of $100,000 to $250,000, falling by 23.4% from 1 year ago. In contrast, we saw a decrease of 7.2% for houses that sold for over $1 million this July. But that's today's video. What's your biggest takeaways from today's video? I appreciate you guys for supporting my YouTube channel and also for watching today's video as well. Hope you guys have an awesome day. And by the way, this is my second time making this video because the first time my screen share did not even work. So anyways, thank you so much for watching today's video. I appreciate you, and we'll see you on the next video.